Hello, and welcome to Between Two Caricatures. I'm your host, Larry West, and with me is, of course,
Steve Case.
And we are not yet proudly brought to you by Liquid Death, Murder Your Thirst. I don't think they got the last podcast.
Oh, well. Liquid Death apparently is a imitation Perrier water that comes from water in Austria that is insufficiently carbonated, but it's in aluminum cans, which recycle better than plastic bottles.
Because plastic is killing the planet.
Perrier should be in glass. If they just transport it in glass, it'd be the ideal drink.
Well, I have to firmly disagree because Liquid Death cares about the environment. So, yeah. But we're not here to talk about Liquid Death as much as we both love it. We're actually here to talk about... What?
I've never tried it, but I'm sure it's a wonderful product.
You're supposed to say it's the greatest thing I've ever had, even... But sure, all right.
I'm waiting for a case to come from our sponsor to be Liquid Death. And I envision it being somewhat to the carbonation level of Poland Springs, as opposed to Perrier or the true Greps water, as a seltzer macho such as myself would say.
You get one more, then we gotta get going.
That's all I got.
All right. We were talking about the last podcast, and we realized that we both have a big shiny object problem, as it were. But this week, we're going to talk about another shiny object, and I'm going to make sure Steve knows all the lingo before we get really into it. We're going to be talking about GameStop, and that's all you're here for. I wrote the description. It's going to say something about GameStop. We're here to talk about GameStop and the stock market and NFTs and unregulated capitalism in a way that benefits the small person, but not really, but kind of does. So, Steve, I'm going to mention some terms, and I'm going to ask if you know... I'm going to mention a term, and if you know it, give the definition, okay?
Sure.
All right. Tendies.
Obviously, it's some class of financial instruments.
Not quite. So, tendies, I guess curse. I'm not supposed to curse.
Oh, curse all you want.
No, my PG-13. I gotta go back and edit this now and mute that. Tendies are it's a term that if you make a lot of money, you get tendies. Like if you get $100, you get tendies. Hold all means hold the stock for as long as you possibly can. FOMO is of course fear of missing out, or FOMO. There's FUD. I can't remember what that is. I'm not going to bother to look it up though. And we'll leave it there. Those are basically the main terms you need to know. There's also options trading, and we're not going to touch that. But before we go any further, we have to give a disclaimer. We are not financial experts. We are not giving you actual financial advice. And I say this, and I mean this, I literally don't know what I'm doing. So if you hear anything from me, whatever you do, it's on you. We are not giving you actual advice. We're giving opinions about things based on what we know. If you use it, awesome. If not, well, we don't really care.
But if you would like to have an expert help you, my sister is in the process of studying for her Series 7 and Series 63 and all of that, and I'm sure she'd be happy to assist anybody that needs some help.
Very good, and I will try to get up on that offer for some other things, but we'll get that. We'll get her as a sponsor later on, so she can get a proper.
I'm sure she'd be happy to sponsor us, and maybe we could even get her to. Her sponsorship could be a case of Liquid Death. Of course, I'd be happier with a case of Trader Joe's.
Oh no! Nope.
Trader Joe's has
No.
water coming from the United States with American carbon dioxide in it. None of that foreign carbon dioxide. That EU carbon dioxide, socialized carbon dioxide.
Okay. Okay, so if you haven't turned off the podcast yet, okay, all right, but back to business. God, what the heck were we talking about? GameStop. We're talking about GameStop and stocks. So
You were
no, we're not doing
defining
financial.
terms, and you gave the disclaimer.
Yes. And also, you know what? I'll just say a quick aside. Isn't it weird? This is like the only thing where you really have to cover your butt. Like if you go, I hear bees putting them on your face for 5 hours, you'll be fine. Everyone goes, well, of course that's a bad idea. That sounds like a terrible idea. There's no way on earth I would ever do that. And you don't have to say, I'm not a licensed physician. I don't know what I'm talking about. This is only my opinion. If someone says that, you know for a fact they're probably an idiot.
No,
Financial
then you
advice.
just come back with no pain, no gain.
Well, financial advice seems to be the only area where it's like, hey,
And that's the truth in financial advice too. No pain, no gain. If you lose a lot of money in whatever instruments, you're just building up your skill for your big kill to come later.
well,
And none of that long-term investing for the minute. It's the way, spontaneous investments.
sir, this is a casino. But I'm pretty sure you know what YOLO means, though, right?
Yeah.
You only live once.
Right.
In other words, in terms of stock advice, and that's another one, stocks instead of stocks, because it proves that you know nothing about what you're doing. So, there are people who have been reckless and threw a lot of money at stocks, and they've YOLO'd their life savings into stocks, and they're suffering because of it, because you don't do that. So I know we don't give financial advice. I'm going to give some at some point. This is not it. But that being said, GameStop, you guys want to know, or everyone here is trying to figure out what the heck's going on with GameStop. And I'm just going to cut to it. So March 19th, there's supposed to be this giant thing where everyone's supposed to get like a lot of money. And I kept hearing March 19th, March 19th, March 19th. What the heck's going on with March 19th? Steve, do you know what's going on with March 19th?
I believe that it's when some futures come due, and they have to come up with the stock or the money, or they're screwed.
Yeah, that's pretty much it. Thanks, everyone. We're done. And honestly, that's pretty much what it is. There's no big lead up. There's no big explanation. There's a lot of contracts due on March 19th. Someone wrote a bunch of basically someone wrote $800 calls for GameStop that expired on the 19th. $800. Like, I bet this stock's going to hit $800 on the 19th. Okay. And apparently there are a lot of those. So there's an incentive to get it to go up.
Now, what's the key question here? How do you know there are these deals out there, these $800 contracts?
How do I know?
Yeah, how do you know?
I don't. Well, that's a great fair question. I'm relying on people on Wall Street Bets, on the Reddit subreddit of Wall Street Bets for this information.
And what is their interest in telling you the truth?
You know what? I am glad you asked that, because that's actually kind of the crux of this particular podcast. That's right. We snuck this one in. Can you trust Wall Street Bets? Now, I'm saying that as someone who's been on Wall Street Bets for 9 months. Here's what I've learned. There are a lot of smart people on there who claim they don't know what they're doing, but they're really smart, and I like them all. I really do. Please don't ban me. I'm not going to get my username, but please don't ban me. Because I really do like that community of apes. And real quick, when I say apes, I mean we're calling ourselves apes now because if you put what was it, 100 monkeys in a room with typewriters, they'll write Shakespeare.
Given
It's a
long
saying.
enough, that's the theory.
That's kind of what happened with the GameStop thing. Only no, we already had Caesar leading us with GameStop, but we'll talk about that in a moment.
Do you mean
But
Caesar from Planet of the Apes or Caesar from
Caesar from
history?
Planet of the Apes. I called ourselves apes. That's why Caesar makes sense. I thought
You
you
know,
appreciate
Larry,
that.
a few summers ago, my wife didn't want to go to the casino, but my wife's friend from Arizona was down, and we went to the Borgata, which is reputed to be the finest uh, casino in New Jersey. And this woman's name is Kim, and we found a machine she liked. They were very nice. The people at Borgata pointed out where the machine was, and I think they even escorted us there.
Okay.
And then you push a button on the machine, and a scantily dressed young woman comes and takes a drink order. And with every order, Kim or I would tip her $5, which apparently was enough to get her back very quickly. And after we each had 4 or 5 drinks, we slowed down, and we probably lost $50 between us, and we had 10 drinks. So we got 10 drinks for $50. We killed an hour. We got these lights to go ding, 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 and we got comped for dinner. And there's a lot of entertainment value in going to Atlantic City or your closest facsimile thereof. And you get free drinks. How many free drinks do you get on Reddit? I ask you, sir.
You don't get free drinks, but you get plenty of memes. And you get to drink in the memes. And
No, you have to get your own drinks. And the best thing about drinks at a bar, no matter who's paying for them, is somebody else is making them. And chances are that person is remaining semi-sober and can properly mix the drink. While my wife always complains my drinks are too strong, and I'm not too picky. You know, if it's got alcohol, I'm okay usually. But so there is something to be said for the Borgata.
I've never heard anyone ever defend the Borgata, so congrats.
Well, you've never heard anybody compare the Borgata to advice on Reddit. I think Reddit is probably a better source for advice on sexual technique and which cars you should buy.
This is a PG-13 friendly show, Steve. But I think that one counts. So the advice on the Wall Street Bets subreddit does tend to be pretty good. I've gotten some really good tips in the past. One in particular that I'll mention is back in this. I can't remember when exactly it was, but it was someone posted you should buy Blizzard. It was at $75 or maybe $70 a share, and they're like, "It's going to go up. It's going to go up in a week." I'm like, "Okay." So I bought a share. I bought a full share, and it didn't take off in a week, but I decided to hold on as long as I can. And after a few months, it actually went up to about $90 a share. I was really happy with that. And it turns out that they were training their employees properly, giving them plenty of time to rest during the COVID-19 scare. They're going to say everyone can work home indefinitely. I was like, that's great. I'm really glad I invested in that company. The stock started to go down. I said, you know what? I made my money. I'm really happy with what I got. I had a really good ROI, or return on investment. I sold my share, and I'm glad I did, but I also regret it because the stock's doing about 95 now. It wouldn't be a bigger return, but it's a company I believe in. So they give good advice sometimes, and they also give some terrible advice, and I can't remember half of it right now. But the thing is, the people on Wall Street Bets, they've been hailed as small retail investors, and I think a lot of us are like me. if I'm lucky, I own 2 shares of something. I own 61 shares of a company called ITP. It's a Chinese, technical paper company, and the stock was supposed to go up. I'm mentioning that as a disclosure as well. I got the tip from Bloomberg, and I'm losing money. So I've actually lost more money on Bloomberg tips than Wall Street bets. So hey, take that for what it is.
Subscribe to Bloomberg?
No, they had an article about 20 stocks to watch for 2021, and ITP was one of them. I bought it. I think I just bought it the wrong time or anything else. It's coming right back up, but
what is ITP?
I think it's International Technical Paper or something like that.
Okay.
It's technical papers. In packaging. I'll talk about that. It's not really worth going into at the moment, though. I just want to mention it as kind of I own 61 shares of something, and I also own 160 shares of PEI, aka Preet, which is a real estate company here in Philadelphia, Pennsylvania, that owns the Gallery Mall. But again, you're not here about any of that. You're here about GameStop. You want? Pardon me. You're here to learn more about GameStop, which is, of course, understandable, especially with all those contracts coming due on Friday, March 19th. And so what's going to happen, no one really knows. It could either run up or it could run down. But retail investors on Wall Street bets. I need to mention that again real quick because there are retail investors on Wall Street bets. There's a lot of us who own like a few shares here and there. But there are people who can make literal $1 million bets. And you won't go there and you'll go there and you won't be surprised at this point to see people go, hey, I lost $1 million. You only live once. Or I bought 1 million shares of something. That's not a small retail investor. That's someone who knows what they're doing, and this is what they do for a living in one way or another. You don't just throw out $1 million. And there are people who, so one piece of advice I'm going to give, this is actual advice, or at the very least, advice I would give anyone, or my opinion of something. Take it for what you will. Never invest more than what you can afford to lose. That's just rule number 1. So that's the end of the advice. But the reason I mention that too is this is a tragic story. I have to mention this because this is part of the GameStop saga, and I really should have done this better. What I should have done is gone through the history, and then we could have, gone on point by point by point. So I'll do that now. What happened was a guy by the name of Deep F Value. I can't mention the full name here, also known as Roaring Kidding, but we'll refer to him as DFV or Keith Gill. We'll go with DFV. You good with that? Okay, we're going to go with DFV. DFV posted on Reddit that he was investing in GameStop back in late 2019. And he got made fun of for it because GameStop made no sense. It was the place where you went to sell your $60 game for $5 so that they could sell it for $45. That was GameStop. And there, no one likes going there anymore. It's not as fun as it used to. It used to be Funko Land and EB Games, and then it turned to GameStop. And it's just been a nightmare. And it was a bad investment to a lot of people. But he said, I believe in this. So over the course of a year, he kept buying more and more shares. He bought more calls, more option contracts. And, it just wasn't going anywhere. And then around December, something started to happen, and that's when I started getting caught in on this. I saw a bunch of posts about GameStop, and DFV, aka Keith Gill, was talking about, I think there's going to be a run on this. I think this is going to skyrocket. So I bought a few shares, and I wound up selling it because I lost money. It's like, okay, this doesn't make sense. I'm not happy. I don't have a reason to keep this. Let me get rid of it. And I can't remember exactly why I did this, but I wound up buying a few more shares anyway. And then around mid-January, I got to pull up my calendar while we're talking about this. This is super important. Mid-January, what date was that? Yeah. January 8th. No, January 15th, something happened. It popped. Big. It was already popping the day before, and it kind of became a meme. And my really small $20 investment ballooned up to $80. a share, and it was insane. Like, oh my god, I've never made this much money in my life before on a stock. And I've been investing for about a year at that point. I started investing in March of 2020, right before the collapse, and perfect timing for me. I just bought a few shares, including F-Stop and GM. I'm really glad I did. And it bloomed. I was like, wow, I've never made this much so fast. I went up, it top went to 80, and then it went down to 60, and then I sold almost all my shares because I said, well, that's all that's going to happen. I'm glad I got my money. I made something. Hey, I'm so out ahead. There's something wrong with that. And I said, well, I had 8 shares when the day started. I sold half of them. I'm going to buy them back. So I bought them back at 60. I lost money and I was really frustrated for the weekend. And then Monday happened. And what happened starting on the 18th is it went up. And I'm going to fast forward to the 21st of January, and it was like almost $400 a share. I was watching it periodically, and it was around like 360, and it was like just free money at that point. It was crazy. And then what happened was the stock collapsed, and it collapsed because Robinhood and a bunch of other brokers stopped letting you buy the stock. And they stopped letting you buy that, AMC, Nokia, BlackBerry, Cause, and a few others. And everything tanked. All those stocks started to tank because you couldn't buy them anymore. All you could do was sell them, and it was crazy. And Robinhood was the biggest one. The rumor became that Robinhood had decided to do it. It came out later that it wasn't just Robinhood doing it. It was all these other brokerage firms, and they were doing it because their clearinghouse, Citadel Capital, or Citadel, I'm just going to call them Citadel. I don't know the full name right now, but Citadel basically said, you can't do this anymore. You can't let them buy this stock anymore. And Citadel told all the people that they work with, like, we're your clearinghouse. You can't let people buy this anymore. We're losing too much money. So that went on for days. It almost went on for a full week. I didn't sell any of my shares because it was already at 400, and they went down to about 120 or so, and they wound up rebounding on the 22nd up to around 300 again. And I said, I'm not going to sell because they were at 400. This was artificial. What happened? It's already back up to 300. I'll just wait. And fast forward a week, they're down to 100, 120, and people are losing their money left and right. And it was really scary. And there's talk about Robinhood having a class action lawsuit and all this other stuff going on. And the thing I want to mention is what happened to not just Wall Street bets, but to all stock market culture. Now, in the last episode, I said, Steve, do you want to talk about why I told you and how I explained it, like the clearinghouse issue, the casino thing?
No, you can. I'll leave something out. Just let's continue for sake of continuity here.
Okay. So I talked to Steve about it, and I said, they didn't have the money. And Steve, you'll back me up if I say this. You said that's not how that works. And I said, yeah, that's kind of how it's working right now. And I compared.
I was a little bit wrong there because apparently there are some requirements that the companies do have that I took money in banking 1 million years ago, and we talked about stocks in the theoretical realm, which is how I knew it. I didn't know the nuts and bolts. So that was there's a small reserve requirement that they do have that Robinhood easily met. They had to raise some money.
Yeah.
Well, some significant money in real terms, but in percentage terms, it really wasn't that much in percentage terms.
Yeah, and in the last episode, I compared it to a casino not being able to cover a bet. Like someone makes a $1 million bet and they wind up winning $1 billion, and
But that's not what it was.
It wasn't. It wasn't actually that. That's the best analogy I can come up with, though, of not being
Sure,
able to.
sure. Okay, so enough arguments.
No, it's
Continue.
fine. It's fine. Hey, dude, it's the show, you know. So, yeah, that happened, and the reason we're talking, and so here was a scary thing with Wall Street bets. I was on another podcast with my friend Jesse Durham called "Kill Your Pods." He brought me on, and we talked for a little bit about this. In fact, part of the reason I'm doing this podcast and even podcasting is because of Jesse. So I want to give him a quick hello and a thanks and a plug for "Kill Your Pods." But I talked about it. It was like a week or two after it happened, and I said Wall Street bets became basically Jonestown, and it was this cult. It was literally a cult at one point. You have to buy the stock, buy the dip. Abe strong together. If we all don't sell our stock, we'll make more money. But you have people who bought in at like 330, 350, 400, and they bought all these shares. And because at that point it was a sure thing. And honestly, my opinion, the Wednesday before it tanked, it was absolutely a sure thing, and it would continue to be a sure thing if it wasn't for the fact that they said you can't buy this anymore, thus destroying the price. So if you sunk $500 in it that you probably couldn't really afford to, I can't say you're an idiot for it if you did it on Wednesday, because it actually made sense. The squeeze was happening.
Well,
Now,
as a quick aside, I
yeah.
believe that there are a number of class action lawsuits against Robinhood and Citadel and TD Ameritrade and the usual suspects.
Oh yeah. There's definitely a bunch of class action lawsuits against Robinhood, and Robinhood actually has a arbitration clause in their contract. I think that thing's being thrown out right now because of what happened. And I haven't tied on to any of those lawsuits, although I need to. So I'm just going to mention that. But it became Jonestown, like, this don't sell. And the saddest story from all of this is someone who I won't mention by name on the show um, lost everything in this. I believe they mortgaged their house, and they were so distraught because no, it wasn't GameStop. I am so sorry. I want to make sure I get this right, and it wasn't related to GameStop. It was something else entirely. Basically, I it's Robinhood related, but it's not related to GameStop. And I'm going to just basically what happened was I already could be conflating two stories, and I really don't want to do that. I don't want to besmirch anyone. But basically, someone lost a lot of money through Robinhood, and they wound up taking their own life because they weren't able to get the help that they needed from Robinhood themselves. And it wasn't that they lost all the money; it's more like Robinhood had an error, and they weren't able to get a hold of someone, and they were panicked that they owed a lot of money that they didn't bet on with an options call. Like, they didn't do this options trade. Robinhood made a mistake, but they couldn't reach someone for help, and then they wound up unfortunately passing on. So that's one of the saddest things. But there were people who mortgaged their house to buy GameStop shares, which is insane. But it became Jonestown because all these people are like, "Don't sell. We're Abe strong together. We have to keep doing this." And anyone who disagreed had their threads deleted, and then it became the opposite. Like, you can't talk about GameStop. And my thought was, there are people who are seriously suffering right now. Like, they're freaked out that they lost all this money. Me, I was in at $60 a share, so $100, sure, whatever, I'm all good. But people were really freaked out, and understandably so. And because the entire subreddit was basically a frat house of "don't worry about it, bro, we're all idiots together." And mind you, they use a stronger word than idiots that I won't use here because it's no. We're all idiots, and hey, it's don't be such a wuss. People lost a lot of money, and they sold their shares, and I can't blame anyone for it. So I'm gonna skip to the turnaround and why we're doing a podcast about it now. If you don't know, and if you weren't paying attention, about 2 weeks ago, the stock blew up like a rocket ship. It was insane. I was what was it? I think it was late February. Yeah, last week of February. So we're talking February 25th. Out of nowhere, it went from $40 a share to 200. Out of nowhere. The news at that point was GameStop had a new CTO that was going to be someone from Amazon Web Services. That boosted it up. It was like, wow, we're actually going to do this. And it went back down to about 120 after going up, that much. It hit about 3:30 on Thursday, and on the 11th here, or the 10th, I'm going to say the 10th or 11th. I got to look at it. But what's important is it popped up, and then out of nowhere, it took a hit, $100 hit. And it went from 330 down to 221, and then they halted trading, and then it went down to about 150, 198, something like that, and then they halted trading again because what happened was someone sold 1 million shares in the course of 5 minutes. The trading for the day, and by Steve, I'll mention this. Steve, you know what candles are, right? Related to trading?
What are?
Candles?
No, I don't.
Candles, to help you and also our listeners, candles are an option of showing stocks. So we're all used to seeing like a bar graph with the little points in the looks like a heartbeat sometimes, and someone had a heart attack or someone it's okay. Yeah. Okay. All right. So candles show you why each tick mark is where it is. It shows you the amount of volume for a 5-minute period or whatever period. It will show you the highs and the lows. So I was looking at the candles.
They always use that in stock charting. So I didn't know the term, but I'm familiar with them.
Oh, cool. Yeah. So they have candles. That's what they call them now. It's great. And I was looking at the volume for the day, and I had been looking at it, and I learned not to have panic attacks about this stuff because I knew what to look for. And I looked at the candles because I had been all day. Volume was about 20,000, maybe 10,000, a couple of 300,000 trades throughout the day for 5 minutes. So 1 million was an anomaly. And the word on the street is that some hedge fund was trying to ruin the stock. They sold as much as they could and were writing call options against it, which is highly illegal if true, and hopefully it's true so that they can get busted. Pardon me. It sank. It recovered. I bought the dip because you buy the dip. I bought a quarter share. I didn't have that kind of money. I bought a quarter share of the dip. And now the rumor is on March 19th it's going to skyrocket because all these option contracts are going to come due. Also, every Friday, there are option contracts that expire every Friday. Not all of them expire, but a lot of them do. Or there are certain contracts for the week that expire that Friday. I told you I don't know what I'm doing, and there's a reason I said that. So, yeah. So at this point, we're waiting to see what happens. We're going to see if it rockets to the moon, and we all get mad tendies, or if we all have FOMO.
How are you going to have FOMO when you're in up to the hill?
Well, FOMO, okay, good point. We'll have regrets if nothing else. If the thing tanks instead of moons, or if it reverse moons, as in it goes to the moon if it was in the South Pole of the Earth, and we all lose money. Oh, God. It is a rocket ride. It is a heart attack and a half. And the only thing there are two things that are keeping me sane. The first is learning what I did from the first crash. Like after I learned that it can recover. It doesn't always, but it can. And also look at volume. That will give you a better indication about whether or not people are trading. But retail investors can't. We're apes strong together, but We never coordinate like $1 million buy or sell. Like, we're not that good. It's typewriters, man. We don't know what we're doing. So that was a hedge fund. And hedge funds are really driving the price. They've always been driving the price. So if you're wondering, well, why on earth would it go up a lot? And you're trying to get a crash course, well, A, you're at the wrong place for a crash course. But the reason it would go up so high is it's been shorted more. There are more shares shorted than exist. There are 70 million shares of GameStop available. And at this point, it is alleged that there are 90 million shares shorted. That number fluctuates so much. And I'm not even kidding. Like, it literally changes day to day, minute to minute, because some people who have shorted the share, and real quick, if you don't know what shorting a share is, basically the bet is, hey, Steve, I I think GameStop is going to be worth $200 a share, and Steve is going to tell me how much it's worth right now, right? You can make up a number, by the way.
It's worth 100 and a quarter.
No, you have to come up with a higher number.
Why?
Okay, all right. I'm going to.
Yes,
okay, all right. Let's go with this.
Fun of
You're okay. You're going to go with you're shorting the share. I say it's worth 220. You think it's worth
350. Bang your head against something now.
Okay, Steve thinks it's worth 330 a share. I think it's worth 220. I'm going to buy a contract saying it is going to be worth 220 a share. I am shorting the share. So
in other words, you have to either come up with the share or the $220.
Well, you always have to do both, actually. You have to pay back the money for the share. So you buy the share at 200 thinking it's going to only be worth $200. You have to buy it back for that much. So at the very least, the hope is you're going to make money on the deal. So you sell that share to someone else for 180, for example, because you think it's going to be worth like 220 or something. You short the share, you get your money. Again, I don't know what I'm doing. I'm just giving you a really bad explanation about it. The idea is you think it's going to be worth less money than it is, so therefore you get like $10 back, something like that. Like you think it's going to go down $10, so that way you sell it for 220. It goes for 210 because you think it's going down to 210. You make $10, you're ahead. So a lot of people are shorting the stock, and there are more shares shorted than shares exist.
Well, wait, aren't the people that are shorting the stock the institutional investors?
Yes,
not retail investors.
They're absolutely.
Well, you need to. That's kind of an important point.
Well, I'm glad you mentioned it. This is why you're here, Steve. You're not just another pretty face.
I just thought I was like a cute caricature, the old white guy.
No, you're in this case. You're the old boomer retail investor.
Boomers aren't old. Boomers are forever young. What's his name? Had that whole
Rod Stewart.
Rod Stewart. There you go.
Forever
Do you think I'm
young.
sexy?
What?
Do you think I'm sexy? Rod Stewart.
I was trying to think of that other song. Like, oh, too sexy for my shirt. Yeah, that's what I was thinking of.
Now that's some Brit. That's some.
Too sexy for this podcast. Too sexy for this podcast. So sexy it hurts. Okay, now that people have deleted our podcast.
Well, we've got 4 viewers plus our sponsor.
Liquid Death. Murder your thirst. Okay, so the idea is that at some point, all these people who have shorted the stock, because there are more shares shorted than they exist, will have to pay a buttload for a share. So if you're like, hey, I'll buy that share for $100, no, I think it's worth more. Right now it's worth $220. So I'll buy that share for you at cost. Like, nope. What if I give you $300? Nope. What about $400? Nope. What about $666? Nope. What about $649? Nope. And you just keep saying no because you're not going to sell. But in reality, you're going to sell. But the price has to be right. And someone goes, okay, I need to buy this share back because if you short a share and you have a contract saying, I'm going to buy this share back by X date, you have to buy it back by that date. If you default on your contract, bad things happen. And
yes, take a look at that movie with Eddie Murphy in
it. You know what? Trading Places might be the best movie about Philadelphia because you don't even know it's about Philadelphia or it takes place in Philadelphia. I love that movie so much. It is so good. And honestly, those are the best Philadelphia movies. The ones that take place in Philadelphia, but it's not about being in Philadelphia. It just happens to be in Philadelphia. Those are my favorite.
Obviously, Philadelphia is a shorthand for an old money community with drunken Santa Clauses.
And the bank right by Rittenhouse Square.
Well, of course, they have to be convenient. That's where the rich people still live.
Are you playing copyrighted music in the background, Steve?
Well, yes.
No.
It just seems appropriate.
No, we're gonna get busted, man.
It's fair use. We got four people. It's totally fair use.
You can argue it's fair use, but I don't think the DCAA is going to agree with you on that one.
Fine, they can sue me. What do you think this was worth? I don't think it's worth the paper would take for them to sue me.
They wouldn't sue you. They sue whoever is holding this podcast. That would be YouTube and our podcasting. All right. Anyway, Steve's foray into intellectual property theft aside.
You mean fine background music?
What?
You mean fine background music?
Sure, lawsuit. So if these people short the share, they have to buy it back and they have to return it at some point. And they have to. They literally have to. And if you don't, you pay a fine. A hefty fine. If you short a lot of stocks, basically, so devil's advocate, you're one of these hedge funds. You've shorted GameStop by 10 million, by a million shares. We're going to go with a million shares because 78 million exists. You shorted it by a million shares. You bought in at $80 a share. It's now at $220 a share. You're going to lose a lot of money because now you have to buy it back at $220 a share. You bought a million of the darn things. So you have two options. Either A, buy those shares like you're supposed to because you have to, you legally are required to because that's your contract. Or B, to break your contract and you don't buy back those shares in times. Well, what happens there? Because a lot of people ask what happens. First off, you get fined out like there's no tomorrow. Like you're fined. And if you're a major brokerage firm, you're going to have some strict penalties. It's not good for your reputation. And that reputation's all these hedge funds have. Like that's their bread and butter. Figuratively and almost literally. Other than their stocks. Like you can't trade stocks if no one trusts you. So they have to buy them back at some point. The question is, when are they going to have to buy them back? And you can also just keep renewing those contracts. You can extend those contracts. You can basically extend them indefinitely. But at some point, you got to buy them back. It becomes a waiting game. So the hope for a lot of people is this upcoming Friday, March 19th, with those $800 contracts coming up, it means the stock's going to skyrocket. It'll be $800 if not more. I also listen to Stock Markets with Bruce. I love Stock Markets with Bruce. Steve, have you heard Stock Markets with Bruce?
I think you sent me a link and I watched a minute of it.
What do you think of him?
I don't know enough to pass a judgment on the guy. They're just
understood.
Too many people out there pontificating about things since the onslaught of YouTube, and I don't know how many of them to believe, to be very honest with you.
So you're saying we're part of the problem, not the solution by doing this, right?
Well, we're being very honest that we really have limited knowledge and we're just pontificating.
True. I will say this. So I listen to stock markets with Bruce. He lives in Canada right now, but the thing I like about him is he's an he's a stockbroker who worked on Wall Street in the '80s, and he has really good stories. And he's very down to earth and explains things in plain English. And he's been doing a lot of stuff on GameStop. In fact, he's been evangelizing GameStop since at least October last year, which was shocking. I actually went to his channel. He's been talking about it since October of last year. He sees it as basically an e-tailer like Amazon. Like they just sell games and that's all they do. So his theory was that GameStop's going to sell off all their stores, go online only, and that's how they were going to make money. And with the fact that their CTO is now someone from Amazon Web Services, um, the founder of Chewy.com is now a major shareholder of GameStop, and which is a big deal. Um, that's supposed to help too. And now they're talking about transitioning, expanding their online business as well, which is a good thing. So that's going to help the stock overall. But there is one more thing I forgot to mention about the timeline. So the day January 18th, when you weren't allowed to buy GameStop or AMC or BlackBerry or any of these meme stocks, they banned you from buying it. Something else happened. And that was a lot of people threw all this money into Robinhood to buy GameStop they couldn't do anymore. And they were bargain hunting and they found something. Dogcoin, cryptocurrency. And Steve, are you familiar with cryptocurrency in any way, shape, or form?
Yes, I'm still quite annoyed that I didn't take advantage of the opportunity to buy a well-known cryptocurrency at a nominal price. That's now approaching $60,000.
You could have bought Bitcoin for $5.
I think less than that.
Damn.
A long time ago.
No, it's no. I remember the first time I heard Bitcoin blowing up was like 7 years ago. Yeah, back in 2013, it went up to 10 grand. I was like, wow, that's insane. And then it immediately tanked like a few months later, and I was like, okay, cool.
Thing is, I think Bitcoin has a future. I don't think GameStop has a future.
What you think Bitcoin has a future?
The theory of Bitcoin has a future, and I think there's enough of it out there. And the people that are mining it, that build a data farm next to a hydroelectric plant or a solar plant.
They found a way to be ethical mining, huh?
No, it's just that's how you make more profit, by using cheap electricity. I
Well,
mean, you
there's
do it in
also
the middle of the desert in Arizona, except it takes a lot of air conditioning to keep your server farm cool.
True.
Wait, you can bury it. You can bury it a couple feet, and Mother Earth will protect your computers.
And then you can do literal mining.
To support your data mining, your Bitcoin mining.
Do you want to explain
you want to explain what all of this just meant to the people?
I was going to ask if you wanted to do it this time. It's worth a shot. I can correct you.
Apparently, you can. I don't know how it's done, but with a computer, you grind away at some algorithm, and you can create refine Bitcoins. I don't know how that works exactly. And they just pop out of thin air.
What exactly is a Bitcoin? Is it something that I can literally go to the desert mine?
Something with no value whatsoever that has been agreed through markets to be worth about 60,000 a piece. And it uses a technology called blockchain, so that it is, under current technology, impossible to counterfeit. And there is a chain of all the transactions that have happened. But one problem with Bitcoin is apparently there are large amounts, millions, tens of millions, hundreds of millions, billions that are sitting out there. Speaking in dollars, not bitcoins, billions of dollars or euros, whichever you prefer, mate, that the owners have forgotten their passwords. And unlike at your handy dandy Bank of America or insert your name, you can't just provide them with 5 or 6 pieces of information and they'll give you reset your password. If you lose your password, it's gone forever.
Yep. And that go ahead.
Maybe is Bitcoin distributed among the cloud, like all the Bitcoin data?
I don't know.
Because I know that the investigation of Trump, a lot of it was given to the Attorney General electronically, and the Attorney General, the New York Borough, the Manhattan DA, Cyrus Vance, has it all stored in a special vault that is protected against EMP. So when Trump gets his little crowd of patriots to come and set off EMP bombs to pull his ass out, Cyrus Vance could say, "Oh, so sorry, EMP protected vault." And my question is, would EMP wipe Bitcoin, or if it's in the cloud, do we need to define that term too?
So I'm going to mention that. So no. So Bitcoin doesn't live in one place. It's if a machine.
So it's on the cloud then.
Well, no, not really.
Okay. I'll shut up.
No, it's fine. You're asking good questions. So the idea with Bitcoin. So I gotta go through Bitcoin real quick. Bitcoin is a form of cryptocurrency. Cryptocurrency is a virtual currency that people can use. And when you go, what's the value of cryptocurrency? It's like it's what people think it is, and then they go, well, that's not really anything. And people go, well, what does a dollar actually mean, man? Upon which you have to go, well, you have a point, but it means I have a dollar, you have a token, but sure. So that's what cryptocurrency is in a very simplistic, sarcastic way.
But a dollar is a token with something behind the token. Cryptocurrency is a token with nothing behind the token.
Well, the value of a dollar is based on the full trust and credit of the United States. So again, what does a dollar actually mean?
A dollar means it represents this country, like a euro represents 17 countries, meaning Germany, France, and some other bullshit countries. You know, and the pound means the UK, hell, Britannia. And you guys just keep this Brexit up so I can retire somewhere with socialized medicine and live better than I do here.
I feel like you just reiterated the point that dollar is worthless, but the joking aside.
What do you mean the dollar's worthless? The dollar stands for us, the United States, land of Trump and MAGA.
So so what happens is the blockchain that you mentioned and that Steve mentioned, the blockchain it exists on everyone's computer. So if you're mining Bitcoin, then boom, you have part of the blockchain. So you can't get rid of the blockchain because it's on every computer that's been mining Bitcoin. So to Steve's point, if an EMP goes off and there's no more computers, then yeah, it's gone forever. If it goes off and it tries to destroy the entire network, you can't destroy the entire network. It's on so many computers, you can't.
Well, I think it's impossible to destroy it because there have to be backups of all these places. There have to be innumerable backups in different media. That's just enough.
Yeah, pretty much. So you can't destroy it to a point. I always have to say to a point because there's always a way, but to a point. So I had a chance to buy big. You know what? Let's talk about 2 regrets. Like, let's talk about our biggest investing regrets. This isn't actually it, but this is one I have. Oh God, you know what? I'm just gonna say it. Pardon me. I have 2 regrets. Back in March, when Bitcoin and everything, when the stock market crashed, Bitcoin crashed, and it went from like 10 grand to $4,000. It was like, wow, I could buy an actual Bitcoin. I could buy a full Bitcoin for the first time in my life for like 5 grand. And I had my last paycheck coming in from my job, and I really thought about it. I was like, I could really make a lot of money if I do this. It's going to go back up. It's a risk, but it'll tie up my money for a few months, maybe a few years. But I'm pretty sure I'll make it back and then some. I really want to do this. And I stopped myself because it was money I didn't have to invest. It wasn't. It was money I couldn't afford to lose. If I lost that money, I would have been in serious trouble. And I regret it, but it was the best thing I could do because I would have been broke. And could I have had nearly 60 grand right now if I had done it? Totally. I would be happy if that was the case. But I definitely made the right call because you don't risk money you can't afford to lose. And if there was anything else, I would say is a big regret that I wish I had done or wish I had stuck with. There's a lot more stocks that
But think how much you'd regret it if you lost it.
Yeah,
You were talking to us from the homeless shelter in Kensington.
yeah. And yeah, that's why I regret it in the sense that I wish I could have done it, but that's why I said I'm glad I did what I did. I have no regrets in that sense. I'm still, you always wish you did more, but you always will. But I'm glad I did what I did. I'm going to look at my portfolio really quick and figure out my second one. But Steve, do you have any like investing regrets? Like, oh God, I should have done that, or man, I can't believe that happened.
I have nothing but investing regrets.
Well, that sucks. Anything you want to share?
Oh, let's see. For my bar mitzvah, my father bought me 100 shares of a bullshit stock. But since I was just 13, I listened to my father. And then I took all my bar mitzvah money and I bought some more of that stock. And when came time to go to college, it was worthless. So it
Oh,
did me no good. So I didn't get to enjoy 13-year-old shit, which at that age, who knows what I would have wasted my money on. And I didn't get to spend it on beer and skiing when I went to college either.
hmm.
So that's one of my regrets.
I'm
When you
looking
get
at
to
my.
be old, you try not to concentrate as much on your regrets.
Well, I want to mention them only because it's good to see that, make sure people know that there is risk involved with this. And even people who say we don't know what we're doing don't know what they're doing. Even idiots can, even idiots like us can make mistakes. Like GameStop, for example. I'm up ahead a lot. Like, when it went down to like $40 a share, I bought some. My average cost now is $80 a share, and it's trading around 267. And I owned almost six full shares. I've had a bunch of success. Like I'm really happy with what I've done. Um, but I've made some bad calls, some really, really bad calls. I think the dumbest thing I did was, oh right, the GameStop thing. This is actually related. So I said crypto went up on January 18th because everyone couldn't buy GameStop, so they went to crypto instead. This is where I was going with this. So GameStop, I'm sorry. So Dogcoin is kind of like crypto. It's a form of crypto. It was literally started as a joke, and Dogcoin was something I invested in because it was like 0.001 cents. It was nothing, and you could buy a lot of it. It was really fun. I could buy a lot. It would trade, and I had a bunch, and then it went up to a penny. And when it went to a penny, I was like, "Oh my god, it's worth a penny!" I owned all this dog coin, so I waited a while, and I waited for it to go down. Like, all right, it's starting to go down. Let me sell almost all of it. I made a really awesome profit. I was really happy with it. I bought back a little bit, and I'm mentioning that because the night on January 17th, it was still down like less than a penny. I'm like, okay, sure, whatever. I think it was worth a penny at that. Yeah, it was still over a penny at that point. I had a bunch of money in there and I sold it so I could buy more GameStop. I sold my dog coin to buy more GameStop, and then the following day it went up to 7 pennies per coin. It was a penny the day before. It went up to 7 cents, and I was freaking out like, ah! I lost so much money because I was so impatient. And it hasn't
So how
gone.
much do you make on your GameStop?
How much have I made?
Or excuse me, on your dog coin?
I made a decent amount. It wasn't hundreds, but it was definitely a very good ROI. Very good. Very
So you made
happy.
$100 and you would have made $700. Is that really worth beating yourself up over?
Well, I'm not. Let me put it this way: I'm never mad about it. It's more like I have regret, but I'm not like, ugh. And it's. I rather look back at those mistakes and go, "That was a mistake. I need to do better," and I did do better. In fact, I mentioned I bought Ford and GM back in March during the crash, right?
Mm-hmm.
Yeah, those are up. I made like 100% ROI on both of those.
Good.
Yeah. So
And GM is going to continue to go up for long term. GM has got the second lowest price for putting out EV batteries. They're just about $20 a kilovolt more than or kilowatt. They're $20 a kilowatt more than Tesla, and they're a good bit lower than everybody else. And they think that in by the end of this decade, GM will be at parity with Tesla. Plus, GM can build a good car, unlike Tesla.
oh, although I'm glad you mentioned Tesla because we gotta mention them real quick. And I'm going to condense this down because we still have to talk about one more thing too, NFTs. But before we get to that, Tesla. Steve, you were supposed to
Yes.
say yeah. There we go. Did you know that Tesla?
We've got some lag here.
Oh, so Steve, did you know that Tesla was a short squeeze last year?
Hey, and they're going to be a short squeeze again.
Wait, but did you know that
Tesla's
they were a
down
short?
like a third so far this year.
Oh God, yeah. So Tesla was a short squeeze. So what happened? Short. So when people think of a short squeeze, they think it's going to be like short, like it's a month. Tesla was a year, and people kept undervaluing the company, so they kept pushing the stock up. At one point, there was a there was a tweet by Elon Musk saying, "I think our stock is overvalued," causing the value to tank. And
You know,
some
one day he's going to get himself arrested.
actually, he's being sued for that. An investor sued him for that tweet. It just came out a day or two ago. So there you go. And yeah, he is in trouble for these things because he said my company's overvalued, and it is. And back in January, during the entire GameStop thing, an article came out when it was about $800 a share, saying in order for Tesla to be worth what it is, it won't be worth this for like 80 years. So the value of the stock went down. It plummeted in the last 2 months. It's now like it went down to like 590 a share. I actually started losing money on Tesla, which was insane. I had never lost money on Tesla. I sold my quarter share, um, and it wound up rebound. My plan was it's already tanking. I'll wait for it to go to 400, and then I'll buy a share or buy what I can. And it rebounded almost immediately the following day, and I don't regret that. You want to know what I did with that money for that quarter share?
Sure.
I bought a share of IBM. $120. I am so glad I did it. It's going to just keep going up at this point because I bought it when it dipped and like it was the bottom of a giant dip. So I bought in then, and I might wind up eventually losing money at some point, but it's more likely to be a gain. In fact, I'm already up $8. So yeah. And I also invested the money in other companies. So that's what I did when I saw that thing tanking. But I wanted to mention that real quick. So if there's any advice I would actually give anyone, one, don't invest more than you can afford to lose. Two, if you make a long-term investment in a company, make sure it's a company you believe in. Tesla, I did, but I did. But there's also Preet, which I actually do believe in. They just had an earnings call. They're doing really well. I own 160 shares, and they're worth about $2 a share. I bought them because they filed for bankruptcy in November, and that's when I bought 5 shares. I bought 10 shares at 50 cents each back in November because I said, at worst, I'm out what $5-10. At best, I'm ahead. $5 risk, and it kept going up, so I kept buying more stock, and I'm really glad I did. It's been really good. I've only lost money on it once, and only for a day. So only invest long term in things you really believe in. And the other one I would say is know when to say quit. I don't plan on holding GameStop for 5 years. That's not me. That's not my plan. It might become my plan if they keep doing well, but I don't fully believe in it. Like I want to. I want to see where they go. So I will be cashing out at some point. You know, give me $10,000 a share. We'll talk. And even then, it'll probably still be a no. But always know when to say enough. Like if you're losing money, like Tesla, I started losing money. I had a big investment in it. I wasn't happy with the amount of risk I had, and I cashed out. I'm very glad I did. Even though it's rebounding, I am very glad I did what I did. That's the advice I actually would give. Steve, you got any for anyone? Or
I'm sorry, I've had very little luck. I'd say invest for the long term. And I'm not sure how wise it is to have to believe in a company. All you have to do is believe that it's going to make you money. Really, I'm not a good person to ask on this subject.
Oh, good. And for me, I only do long term investing in things I care about. If it's short term, I don't care. Like ITP is a short term for me. It's becoming a long term because I'm losing money. But it's if it's something I don't care about, like there's plenty of companies I'm investing in that I don't care about. It's a flip. It's like a 1 month flip. But the companies I really care for, like Hostess, I really like Hostess. I own TWNK's their symbol Twink for Twinkies, and yeah, I like it. I believe in long term. Chipotle's another one I believe in long term. But I'm just throwing out names. There's one more thing I want to talk about because of this entire investment frenzy, and that is NFT or a non-fungible token. And regret. Oh, Steve, you're going Sinatra, Steve. Sinatra.
Hey, Sinatra is from the greatest generation.
We can play. We already played 3 seconds. We can't play anymore. Otherwise, we're gonna have to pay him. That's it. We're done. No more Sinatra. I love Old Blue Eyes. No more.
That was only a second. We've got 2 more seconds.
No. Okay, so NFTs are the new thing that are blowing up, or a non-fungible token. I did not know what the heck that was 2 days ago. So Steve, did you hear about the guy who sold a digital file for $69 million?
Yeah, but how do you know that that's the original?
Well, it's nice for starters. That he got 69 million. Nice.
Back in the 60s, people were buying Marie Antoinette's bones. There's a fool born every minute.
Ouch.
And the thing is just finding what they'll buy. Oh, you'll buy a little digital sponge with a rainbow coming out of its end for 7 figures.
Neon Cat is an institution and a treasure. He's a Pop-Tart with a cat for a head with a rainbow tail. It is a national treasure, sure. A national treasure.
What do you mean a national treasure? First of all, there is no American nation. Second of all, it's an international treasure. It's a world treasure. You are just an anti-globalist. Again, you are nothing but a closeted MAGA.
Oh, that's Steve. I told Steve we have a couple of rules when we talk, and one thing is no hits below the belt. Steve, you broke the rule. That was below the belt, man. Call me a MAGA.
That's fully in keeping when the people learn about you. Obvious that that's quite sarcastic and fully in keeping with the spirit of the show.
Or so you claim, good sir. Okay, so there's an artist named Beeple who
should I call you a bircher? But by claiming this international symbol of youth and happiness as your own, it's just American intellectual imperialism run rampant.
Okay. All right, you're gonna kill me, man. Okay, so an artist by the name of Beeple has been creating artwork every day for the last 5,000 days, and he put them all together for one giant piece called A Piece a Day the first 5,000 days. And that sold for $69 million. Now, to Steve's point, how do you know it's the original artist? How do you know it's authentic? That is the best question possible. So before we go into that, I got to explain a little bit more what an NFT is, a non-fungible token. Basically, the idea is, say you create the Mona Lisa today. You create the Mona Lisa, it's a completely digital painting. Or you take a photo of your copy, you make a painting, you take a photo of it, and you put it online. You have created a digital file. You decide that you're going to sell that digital file or piece of music or anything else. So you have your digital Mona Lisa. You've uploaded it. You made it into an NFT, a non-fungible token, and using a bunch of services that I won't go into because I'm still learning it and I don't want to give anyone a plug here. You're able to sell that for money. So they have what is considered an authentic version of the artist's original work as a non-fungible token, and they can claim, hey, I own the original digital file for this. That's what an NFT is. Now, to Steve's point of how do you know it's real? Well, that's actually a giant problem right now. NFTs have been around for a while, but no one really cared. They've become a big thing lately because it's a big speculative bubble. The Beeple thing where he made 69 million off, that is just blowing it up. So there's an artist who did some work for. There's actually two stories here. I'm going to tell them both. A game studio hired a bunch of artists to work on a game. I'm not going to plug the game. Doesn't really matter. A game studio hired a bunch of artists to create some files for them years ago. The NFT thing started blowing up, so they turned their artwork into NFTs and started selling them for a lot of money. The artists are understandably very upset and angry about this, and that's all I know at this point. On the flip side, an artist worked for DC Comics, and they started selling their original artwork, the artwork that they created for DC Comics, but they created the artwork. They started selling them as NFTs. DC Comics is now mad because they're selling the artwork that they made for them. In fact, he made like $1.8 million.
So are you saying that the Museum of Modern Art could digitize their Liechtensteins and make $63 million from their Liechtensteins?
They actually could. And that's actually the problem at this point. The MoMA, to your point, let's use your analogy here. The MoMA Museum could take photos of their Liechtenstein paintings and make them into NFTs. because there's no rules or laws stating
Don't
that.
you see some irony in that process?
Oh yes,
I
I
mean, what's the
absolutely do.
Liechtenstein? What is that genre called?
Well, it's considered just pop art, but
I
it's
thought it's called
also
photorealism. Seriously, I thought that was what the genre was called.
no. Well, you're talking about Roy Lichtenstein, right?
Yeah, yeah.
No, that's pop art because he would take comic panels. He would take comic panels from old comic books, blow them up, and mix
Right,
the
but how's the comic book made from little dots?
right,
From
and he would
little
mix the
pixels?
dots. I get what you're talking about. It's not considered photorealism. It is considered pop art, but that's a I gotta say that's one of the best arguments I ever heard about calling his work photorealism, and I love that. But yes, this is basically Liechtensteining a Liechtenstein. So there's a problem with people stealing artwork now and then selling it as NFTs. And if once piece of artwork is made into an NFT, you can't recreate it. I'm sorry, I forgot one key thing about this entire NFT biz, which is an NFT is on the blockchain like crypto, like Bitcoin and all these other cryptocurrencies. So that way everyone had a ledger of who created what and when it was made available and when people bought or sold it. So I'm looking into it. I'm just going to leave it there. And there is a problem with people stealing their work, stealing other people's work, and creating NFTs from them. And it's a multi-million-dollar industry at the moment, and with no regulations. One thing I have to do, I'm an artist, and one thing I have to do is I think I'm going to have to contact all my clients. So I'm also a commercial artist. I do commercial illustration, design work, and more. And in every contract I've ever written, I state very clearly I own the original artwork. Period. Full stop. The original artwork is owned by me. So I believe that if anyone was stupid enough, and that's the word I'm going to use, stupid enough to create an NFT of any of the files I created, unless it was a work for hire contract, if they did that, I would sue them, and rightfully so, because my contract says I own the artwork. I own the original artwork. And a lot of time, I only lease out the artwork for a year or two. Like, they don't own it, they're leasing it. So if any artists are listening to this, please make sure you covered your butt with any contracts you've written. If someone takes a photo of your artwork, it's a photo and that's it. They don't have the right to your artwork, and just remember that. But this is a giant speculative market. It's blowing up right now. It's definitely a bubble. I see a future with NFTs, but I think it's greatly inflated at the moment. That doesn't mean I'm not going to try to cash in, though.
Oh, cash in.
I've got a photo. I'll tell Steve about this one later. He doesn't know the one I'm talking about, but I'll send him a link. And it's like, I know one photo I've taken, I'm definitely turning into an NFT without a question. Like as soon as we're done with the show, I'm gonna do that. And I can't think of anything else related to stocks. I've been wanting to do this for a while because I invest in stocks. I like paying attention to this stuff. I actually had people start asking me for stock tips. I'm going to give a few. And again, I don't know what I'm doing. This is not advice. But if you were to ask me, Larry, what are you investing in, or what do you believe in right now, or what do you think is a good investment? I still believe that commercial retail is a really good investment right now. I think it's undervalued. Honestly, I think it's undervalued at the moment. Malls are reopening, and yes, malls are dying overall. But I think places like which again I own 100 shares of. To be clear, I own a lot. I do think it's coming back, especially now with the people. Things are reopening. And I'll also throw in. I think AMC is good just short term though. And and Twinkies, Hostess, aka Twinkies, and Chipotle. Those are my investment picks. Steve, you got any?
as I've stated several times, I'm not a successful investor, so I really don't think my advice is too worthwhile, but I will, in any case, in the spirit, pontificate. Number one, I think commercial real estate is a loser because we're seeing a move away from the cities to suburbia, which and rural areas, which will continue to happen. These less dense areas will be less able to support the uh, various specialists that the people used to an urban area are used to, which will help Walmart and Amazon and Target and the like. There just isn't enough mass in these small places. You will lose mass in second-ranked cities. Conversely, I feel that first-ranked cities like San Francisco, New York, maybe Chicago, will see their population come back because what drew people there will be recreated and the people will be drawn there again. Philadelphia, I think, will be pretty stable. Cities in the Philadelphia class. Unfortunately, Baltimore, with the racial problems in Baltimore, have been really bothering me for years. I mean, it wasn't like that when I went to college in the last century sometime at the University of Maryland, College Park. I don't think, I'm not bullish on Baltimore. I am bullish on Philadelphia, New York, and Boston, and San Francisco. And in those cities, I think your commercial real estate would do well. But I think in general, commercial real estate's a loser. Val Artush, or Arkush, the county executive for Montgomery County, was discussing COVID vaccinations and bemoaning yet again the fact that we're getting very little vaccine from the state because the state is getting very little vaccine from the feds. There are two big box stores at the Willow Grove Mall that are empty that she sees being able. She has made arrangements with her team. She's the county executive, so she obviously doesn't do it all herself, but to turn 10,000 people a day in these sites. So that is a pretty big piece of commercial real estate that is sitting empty right here in Willow Grove, which is not a depressed area. It's not doing as well as it was 5 years ago, but it's doing okay. I don't see commercial real estate being the greatest investment, except in the few exceptions that I pointed out. And I'm sure there are going to be others, and there is going to be the continuing movement towards older abandoned cities. Maybe Detroit will continue to come back. Maybe places in Ohio. Cleveland was once a beautiful city, and maybe it'll be that way again as long as the Great Lakes don't rise too fast. I don't think commercial real estate's a winner. I'm sorry, bud.
Fine.
But I do think that
I'll trash about my pick even more. Go ahead.
I do think that electric recharging companies are a winner, and we will see them spreading throughout the country.
Agreed. I also would say invest in copper and lithium.
Well, there's going to be, so it seems like EV battery life is breaking down into these stages. Like you've got your EV for 5 or 10 years. Then it's going to be used as a battery backup for whatever purpose. There are all kinds of ways that it can be used for battery backup. Then Volkswagen has just built a demonstration plant in Germany that, using various technologies that they're not saying, reclaims about 95% of the rare earth material out of an EV battery, which historically they've only reclaimed 60. So the demand, the rare earths that only come from depressed third world countries in China might not be as big an issue as once we feared.
So it might become more ethical, huh?
And the need for lithium might not. Copper will just continue to grow. I mean, yeah, there's plenty of aluminum wiring, but people prefer copper wiring, and
Yep.
electricity is going to continue to grow. In Texas, people are trying to move. In California, this has already happened, that there are regulations that you can't have gas, natural gas, I think propane in new construction in a lot of places because they're trying to reduce the carbon footprint. And in Texas, gas companies have gotten language inserted that, we have to have zero net and blah, 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 and all kinds of wiggle room to push it.
Wait. You're saying they're trying to ban propane?
All forms of gas, natural gas, propane.
Why do they hate Hank Hill so much? It's a clean burning gas. Hank Hill is sad right now.
Carbon. It's carbon based, and the idea is to use non-carbon based electricity that we get from wind turbines and solar, and to a much lesser extent, waterfall.
But it burns clean, and you taste the meat, not the heat.
What?
You taste the meat, not the heat, with propane.
What the hell does that mean?
Strickland Propane is a proud sponsor of Between Two Caricatures. Taste the meat, not the heat.
Taste the meat, not the heat. And that brings up yet another source of global warming. The production of meat is terribly inefficient.
Well, that's for another episode.
Levels, forgetting about the whole moral question.
That's another episode, Steve.
Well, what is with this? You taste the meat, not the heat.
You've never watched King of the Hill.
No, it's a good show, but I don't get to
watch
because reasons.
I mean, I'm glad you watched The Critic, but King of the Hill's good too. It was.
I just said it's fine. It's not a problem, but it doesn't matter how you make the damn thing hot. It cooks the same.
No, it doesn't. You know, I could literally just make King of the Hill jokes for the next 10 minutes. I won't. What I will say is, to wrap this up, there is a bunch of things that came out of this. Like we talked about how Robinhood basically banned you from buying stocks, and there are hearings taking place right now, both on that are taking place on Capitol Hill in both Congress and the Senate, related to Robinhood. But they're getting the story wrong. They're saying it's pay to order flow is the problem. I'm not even going to touch pay to order flow because I barely know what that is, but that wasn't the problem. The problem was Robinhood said you can't buy a stock when it was hot. That's the problem. Nothing else was. Like, there are other issues that are at play.
Well, the reason for that, they had an excuse for a short time, but they stretched it out too long, and that only applied to Robinhood. It didn't apply to TD Ameritrade and all the other, and Schwab and all the other competitors.
Right, and that's why they're also getting the blunt of the criticism, and they brought DFV to testify about why he was pumping the stock on Wall Street bets, and basically it came down to, I like the stock, and I really believe in this company. And he actually gave yes or no answers, whereas everyone else was like, thank you very much for bringing me on today, and I really appreciate your question, and I'm not going to answer your question for 5 minutes so I can blow out my time. So they're missing the biggest problem, which is they wouldn't let people buy the stock. That's a problem. Go after them for that. What regulation can you make sure you can do to make sure this doesn't happen again? Have the SEC actually do their job. There's an expletive I was going to use, but I think you know what it is. They should have done their job. And it's so frustrating because you hear stories like, back in the 80s, if you had a stockbroker and they waited too long to answer your call, you could be reported to the SEC for that. And it wouldn't be fined, it would be investigated, but it's like, hey, you took too long to answer your phone and someone complained. We're looking into that. They don't do things like that anymore. It's more, even if you still like $1 million or $1 billion, they're not going to look into you, and that's the problem. It is a casino. The stock market has become a giant casino, and unless they,
broker's out of the picture for most people.
of course, I don't have a broker. I don't have that kind of money. Well, so let me ask you a quick question here, Steve. Back when you were able to buy stock, if you were like, I would like to buy a share of, say, IBM, what would your broker tell you, or what would a broker tell you?
What do you mean? That question can be answered in so many ways.
Okay, let me put it this way. What I heard was, if at one point you wanted to buy a stock, back before you could buy like one share, you couldn't buy just one share of a stock.
Oh, you mean 100 shares? That deal?
Right, you had to. Right, like you
Yeah.
had to buy X number of shares. You couldn't just buy one.
You generally bought 100 was the standard.
Right. So that kept a lot of people out of being able to buy into the stock market. Like, I couldn't buy 100 shares of anything. I can barely.
Well, that's why you got into a mutual fund.
Well, no.
That's why mutual funds got started, for that very reason.
Are you saying
which got a 2 or 3% fee for doing nothing?
Are you saying Robinhood's a mutual fund?
No, not at all. It's a whole different thing.
Right.
Robinhood is a new model, based on. It's a different world now than 1960.
Right, and basically the old model was you got a broker who would help you, and they would give you financial advice. They would help you out because there was a vested interest to help you. And now it's like,
so you're saying that there was a fiduciary responsibility.
It wasn't there. I wouldn't say there was a fiduciary responsibility, because that's not who they were.
Right.
What's the term? There is someone who has to do that. I can't think of the term right now. Like, what are they? A fiduciary?
Well, yeah, there's a fiduciary, but some brokers have a model where they profit if you profit. They don't profit by churning your account.
Right. So basically, but there was a vested interest to make you money, because that's kind of how they got paid. And additionally, if you did
well, they got paid by selling stock, is how they got paid.
Well, obviously, but the other part of it was the vested interest was investing time in you, because you actually were going to keep bringing them more money.
Or you were a live one, but whatever.
Sure. But now it's like you can't get a broker's attention anymore, even if you call them up. If you call up a broker, I don't have a broker. I just use Robinhood, and I'm trying to get off Robinhood, and it's different. So you can literally just buy a share these days, which is great. All I want is one share of GameStop. You can even buy a fraction of a share in a company. Like, I don't own a full share of Chipotle. That's like $2,000. I own $10 of Chipotle. I have enough to buy a burrito bowl in Chipotle. Or a quesadilla that they just came out with. Like, so that's nice. It's a different world. And we've gotten to the point where there's no real barrier to get in anymore. Anyone with $25 can go on any one of these apps, like Rebull or Public, or I'm not going to mention, like anything you want, and buy a share or something, or a part of a share of something, which is pretty good. But Robinhood, so what can Wall Street, no, what can the government do at this point? You have a lot of people saying they shouldn't do anything. Steve, if there's any one thing that the government should do about the stock market, what will you think it is? What do you think it is? Delay.
I don't. You come up with these big open-ended questions, and you want an answer immediately.
Yes,
I have some kind of fiduciary responsibility.
For
like, you can't go that they can't pump and dump people.
What, the brokers? Or
yeah, the brokers.
I'm with you on that. I throw these big questions at you because I think you come up with really good answers sometimes, and that was one of them. Sorry, I know it's the only thing about podcasts is you always have to be on, or at least close to on.
Yeah,
Um,
you
I'm bad at this, man. I'm just
come
doing
up
what I
with these
can.
questions, and to create an answer right immediately isn't easy.
It's too much. Okay. I will not. I
I
will
do
make it a
come up
point.
with an answer. It just takes a few moments. I think they're pretty good answers.
They are.
But let's have a vote. Let's put this to the four viewers, or maybe it's down to now.
What would be the question? Oh, what should the government do?
Sure. What should the government do?
Okay. What should the government do to make sure Wall Street's better regulated? There's one thing in particular I want to see happen, and it would be the transaction tax that they've been talking about for years. Like
That's
a fraction.
that's a whole different thing. That's not about regulation, but it's certainly
It
not a bad
is. It
idea.
is. But here's the thing: it is about regulation because you know how I'm going to say this. You know how every time there's a mass shooting and the Democrats go, "Hey, we should actually have some sensible gun control. Like maybe you shouldn't, we should close the gun show loophole." And people immediately go, "Well, that wouldn't have stopped that mass shooting." Well, no, it wouldn't because every mass shooting is different and there's no simple solution there. But you can do different things
How
to
do they
make it
have
better.
mass shootings in North Korea and other places? It's some guy with a knife.
Yes, they need knife control, but right now we need gun control. In this particular case, I
Well,
think a financial
I'm
transaction.
arguing your point, Larry.
I know, but I think a financial transaction tax would actually help to some degree with all this. If there is if you gotta pay like a fraction of a penny per trade, it might make sure that these giant firms aren't going to blow up stocks. And also, another thing they can do is
I
shorten
thought that's a way that the government can do all kinds of great things with a new source of revenue.
that's also part of it. But I'm
Plus, it'll
talking
really piss off Republicans.
that's another benefit. But the first thing is, it
Why don't
might.
we start owning the conserves?
I call it only the cucks, but because conservatives, cucks, it's anyway. Anyway, the other thing that can happen is making sure you can't overshort a company. Like if if a company has 70 shares, you can't short it by 90. That's a problem. Shorting a company isn't an inherently bad thing, but doing it on that level is insane. And it's going to collapse. Like all this stuff is going to collapse. Like the same thing that happened, and this is going to be the last thing, and then we're done at this point. The GameStop thing, which has been ignored. GameStop tanked on the 18th. Steve just wrote me saying, "Are we going on for 2 hours?" No, we're wrapping it up. Wrapping it up. GameStop tanked on the 18th, and at the same time, on the days leading up to the 18th, the Dow Jones Industrial Average, along with the Nasdaq along with the S&P, and Dow Jones and S&P were tanking until the 18th, because what basically seemed to happen was all these hedge funds were losing all this money, and they had to start buying back all these shares, so they sold off their piggy banks. They sold off their Fords and their GMs and their IBMs and all these other companies that they knew were going to make more money in the long term. And then they tanked those stocks so they could have money, and because they had to sell them en masse. Then they had to buy back their GameStop, and then GameStop you couldn't buy, and then it tanked, and Dow Jones and S&P went right back up. It's a casino, folks. It's a casino.
With no free drinks.
No free drinks and no live entertainment. Just a couple of memes every once in a while. And some really angry, powerful pit bosses. That will do it for this rendition of Between Two Caricatures. I've been Larry.
And I'm Steve.
And this show has not been brought to you yet by Liquid Death. Murder your thirst. We'll see you next time.